All right. Let's talk about in this lesson. This is purely just going over the fundamentals of the SATI ATR um, levels. These are static, average true range of the market. You can use it for anything, whether it's a stock. For us, we use it for NQ or ES for futures traders, but everything works. Every stock or entity reacts differently with the ATR, as in ES reacts differently to the ATRs as in Q. So whatever instrument you're playing, or you need to learn by back testing and looking at how in the past patterns, how things react to the levels. Because they can be really accurate, but they can also be very off if depending on what you're using. What I have found and what I've been teaching with at least in Q of how the market moves around the ATR by, as in you have fake breakouts, reversals, you have these average about 10 to 15 points of a stop before you know whether there's an actual true break of a pivot. But let's go for the basics. So if you load the SATI ATR levels and you click on the sprocket, you have multiple different options. You have the day. So day is great when you're using any kind of day time frame. So right now these are the day. So it happens these levels are only for today, and it's great to use it on the 1, 2, 3, 5, 10. Really 30 minutes is max time frame for candles, right? And then if you then move to the next area, which is multi-day is this, where you're using it for the week. So you see the previous week, this was only a 4-day week, so you have Tuesday, Wednesday, Thursday, Friday. So this see the week before 1, 2, 3, 4. It's also a 4-day week. Here we have 1, 2, 3, 4, 5 day. That's what these vertical lines are separating the days. So you see how the pivot, you see how it only charts that for the week. So multi-day is for the week. I use that in time frames, the 30-minute candles, but you want to be using it, your hour candle or 4-hour candles in these bigger time frames. And it gives you a sense of where big reversals could be. So like for the week, you can see that this week, this +1 ATR, we were maxing out. And so this was a good area to be looking into a possible short. So let's go through what the levels actually mean. Doesn't matter whether you do multi-weekly, daily, and it depends on what you're doing. If you're a day trader, you're using daily and multi. If you're a swing trader, you're using a position, which is like for monthly or quarterly, which would be like your swing or position settings. But this is what you call this line right here. You can make whatever colors you want, but I've just gotten used to how the original colors right here are, where you have the middle right here, this gray line. This is the previous day close. You see how we closed? And then you have the pivot right here. This is the bull, the blue, and then the yellow, this is the bear. And then from there, so this right here, just this area right here, this is what is called, if you ever hear me talk about, it's called the box. It's the box play. If you end up opening somewhere in between, or you don't close like on a 30-minute candle, then the likelihood is you're going to come down to at least the bear, and then if you can't clear that by a certain time, like 10:30, then you're most likely going to go to the bull again. So it's a box play. You're sort of consolidating in this small little area. That happens, a couple times a month. But right now we've been having a lot of volatility, so you can sort of you can tell by the price action how fast we're moving, whether we're going to stay in or not. So the other level on the upside, this is called the mid-range ATR. So actually, in reality, let's go through, I call it mid, bull, all that. In the settings, you have the previous close, the lower trigger, the upper trigger. So I call this the bull, this is the bear. So really I should stop calling that. This is what I've called it from the owner of these pivots, what they would call it. But the lower trigger is anything below it, you should be bearish. Then you have the key target level, which is I call the mid-range. So it's the mid-range between the bull or the bear, and then the ATR level, which I turned orange. So then you have levels in between, which are important, but they're fibs. So a lot of times when you're in these massive ranges, you'll have a few little fibs in between. So with this, you have two options. You can say show all fibs, Fibonacci level, show all extensions. And I have levels at 5, and but the styles you can see right here. So the lower trigger, and then it's the negative 38, 50, 61, 78, 100%. So 100% is that full range ATR. That means you've gone a full range for the day or the week. And a lot of times the range is set by the opening price to there. But how it works with the pivot, a lot of times you have a full range every day. It just plays different off these levels. Like today, you're playing a full range from the bull all the way to the mid. So if you actually sort of measure it, you see from here to here, an average range is 220. So we're going above and beyond that range. You see how we're just in the first, say, hour, we already hit that range. And then we hit the range again, going down. So, well, actually going up. So going up, you can see that actually, wow, I just now noticed that you had the full range to the upside right there from the bottom. And that also coincide with a lot of other things. Previous day high was right here, which also that was the high right there. So anyways, not to get confused on technical analysis. So how we play this is here you have to the upside, here you have to the downside, right? And everything in between. So there are multiple plays that you'll hear me say. You have a box play, you have basically a push to bull down to mid, you have a gap down to mid all the way to bull, you have a bear all the way to mid to an ATR, you have a big gap down to mid, down, there's multiple different scenarios, but you always got to be nimble in the direction that you're playing and know the trend. And that's why it's also super important to know where you're at on the bigger time frame. So like you would know, like on this particular day, this is Tuesday, like that we closed above here, so on Wednesday that your resistance is going to be down here. What did it end up happening? It came down here. That's 804 area. Well, let's take a look at Wednesday, which was yesterday's action. Look at this, 804. So it didn't go all the way down. It opened, shot up here, then came down to here, but it didn't go all the way down to here. It stopped right at that 804 area, which is also important. So that's why you want to use sort of the multi-day and intraday for your support and resistance. But once you notice, you see how once you came back up here, you broke out. This was a fake breakout. They reversed it. They chopped it. And then when you broke back above this pivot, you could have entered in anywhere here, and then your target would be all the way to the mid. And sure enough, it did that. So that's the reason why you use these, or like say for instance here, this was a fake breakout. I'm going to take that off 1 minute. Let's do 5 minutes. That is a little bit easier to handle these candles. So that's how you play. It's the same thing here. You see how it was a failed break above. They came back down, and they dropped it all the way and almost made it down here. And why did they not? Where did they go? Why did they stop in the middle? Well, let's take a look. If we go back to the SATI ATR levels and you click on Show All Fibonacci Levels, the extensions, the fibs, will show up. These lines right here. The reason why I didn't have them up before is because you don't want to get too confused, on the bigger picture. So yes, it is good to know, but look, if you had them, you can see how we're bouncing off that and how we went right into it and then we reversed. A lot of times I'll see this play where it'll drop all the way down to this fib and not make it quite down here, reverse, and then make the move again. And then you can see this happens a lot too once you break the mid, where it consolidates underneath in between this fib, and then it breaks back above, and then where's your target? You go to the next. And you can use the fibs as either profit taking, or you can also use it as support if you miss this move and you wait for a pullback, and then that's your good entry for the bigger picture. So if you actually go in and watch how price action moves around these levels, you can sort of form a thesis in knowing all you're trying to do is capture some of the move, right? You can't be perfect. And sometimes you get stopped out like this, but sometimes you get back in, right? And it's all about seeing how the market moves around. And that makes it super easy to trade in a way. Now, execution is a whole nother level of trading, which is very hard. But actually knowing what the market should do based upon levels, this is a game changer. Now when you start adding other elements that help you get a sense of the bigger picture, I like using VWAP. One, it gives you a sense of where the volume weighted average, where the volume and price is, gives you a little bit of an idea of how extended something is. You see how we came back above. Now we should be bullish because we're above VWAP, and comes back down below. But look, you see how we were trending up and VWAP wasn't following, and then it came all the way back down into VWAP. Sometimes that's really nice, to know where possibly something could go. Use this as a wall, as in if you're targeting here, I may not want to actually sell right here. I want to sell maybe into this because you might have resistance there. So anyways, that's VWAP. And then sometimes I actually like using the Sonar Lab HTF candles. So what this does is it allows you to have an overlay candle. So you see the candle overlaying, those are 30-minute candles. Over here, these are 4-hour candles. 30-minute small candles, 4 hours big candles. These are 5-minute big small candles, 30-minute big candles. Why? Because it allows me to see how the market's reacting. You see how we are closing above? So you would think this would need to go up, but it didn't. They ended up going up and then shooting back down, and see how this was closing underneath. So that tells me on a bigger time frame, 30 minutes, they're bringing this down. And you see how we're consolidating underneath here. And once you have this 30-minute candle is solid above this line, I can almost guarantee you that this was not going to come back down for the rest of the afternoon. At minimum, this was going to be support. So then you would know your best risk reward is to the long. So that's why I like using that. And then the third indicator that's also that is helpful is the SATI pivot ribbon. And that allows you to sort of see the trend and use an EMA to see when something's going to flip. But sometimes it can be overwhelming and distracting. At the end of the day, if you take all that away and you just play the chart and the pivots, you see how see how it consolidated underneath there, came back above. You just get in here. If you don't know what's going to happen, like even if you didn't know what was going to happen for the rest of the day, all you're doing is playing by rules. So the rule states you're above, you need to go long right here, your next target is right here. I don't know when it's going to get there. It could take an hour. It could take 30 minutes. It could take 10 minutes, just like this candle. I don't know. All I know is it does not want to go back below. And if it does, it's going to be violent and come back down. Because again, it could end up doing this. It could be chopping around and then drop, right? But you don't know. All you know is, hey, I know that they're not taking it lower right now. So the best thing you do is get in, risk back below, and then you just hope that it ends up going back in the direction you want. So if you were to exit out, see what it does. See, it goes right to it, and it does that within. If we look at the 30-minute candles, you can see that did that in basically, like, let's see, 5, 10, 15, 20, 25, 30, 35 minutes. 35 minutes, it moved roughly, wow, from here was 810. Right here was about 890. So that was 80 points. 80 points. That was a good chunk of the move, especially if you missed a lot of the other move. So, anyways, that is a good idea and an indication of what these pivots mean and where you need to be sort of biased. So, like, again, it's below the bear. You need to be bearish until it finds support, and then you can be bullish, right? And then knowing that if it ever comes back above here, remember, if you were short right here, you would be getting stopped out, and that's what ends up happening. People are getting stopped out, and normally from here it'll go back to the blue. That only happens maybe once or twice a month when you have a move like this, and it worked really well because this was a high volatility day, but it also was nice because you see to the left it was playing in between big range on multi-day. Another one is sometimes I'll use the Saturday ATR levels again, but I'll change it to multi-day and make the lines thicker. So then, look, you can sort of get a sense of where your big range is going to be. I use it on volatile days. Volatile days, you don't want to be using these pivots because you see how you can get whacked really easy. You want to be looking at bigger time frame candles, waiting for closes, and then looking at these bigger time frames of support and resistance. So anyways, that is my setup and how I do things. You can use and modify how you want to, but I have noticed that this is a very easy way to get a sense of what they're trying to do. Like right here, you see how they dropped it, came back up. They closed that candle above. So that's telling me that they're going to probably the rest of the day probably chop it. If anything, come back up here, which what do? They dropped it right into here. They scooped it back up. And then what do they end up doing? Coming all the way back at the last 5 minutes and tapping the top. So, I mean, there was range here, but the majority of the move was here and then here. So a lot of times in the morning, what I like to do is I play the morning, whatever ends up coming about it, right? And then before the afternoon, you set a position and you let it either work or you don't, and you walk away. If I would have walked away and got in right here after this broke above, you could have just set your targets to here and then possibly here, and you would have got triggered, and you wouldn't have done anything for an hour. You could have walked away and you would have got paid. But it's always harder said than done. But anyways, that is a review of the ATR levels. The one last thing that's critical would be the extensions. So you notice right here, you see how we went past this ATR move. If you go right into here to your extensions, if you ever got past this, then you will have extensions, and you see how it plays right into here. And if you get above here, you just trust it. And guess what? By the end of the day, it came all the way back into here. So you either go short and it comes down here, or you go long right here. It all depends on how much time's left in the day. But I mean, the market can do anything it wants. I've seen it go all the way to +1 or -2 ATR, which is very rare, but it has happened. Let's see. Yeah, and that's pretty much it. All right. Good luck.